I'm Kelly Buckley, and today is, okay. Good afternoon. I'm Kelly Buckley, and today is,
See how it's loading over there?
yeah.
There.
Good afternoon. I'm Kelly Buckley, and today is September 11th, 2020. And we're going to be talking a little bit today on this edition of Facebook Live about the choice, COVID-19 shutdown, and economic reawakening. You know, there's a lot of choices in life, and today is memorial of a series of choices that proved American exceptionalism again. So I want to talk a little bit about 9/11. You know, 19 years ago, almost 3,000 people were brutally murdered in our country. And in that 19 years that have passed, we saw many thousands more families shattered. We saw children who lost or never even knew their mom or their dad, who were lost to war. We also saw the absolute exceptionalism and the resolve of America in dismantling and destroying a very evil ideology. We saw personal and family sacrifice by our first responders and by our Army, our Navy, our Marines, our Air Force, and our Coast Guard service members. And for 2 decades, nearly 2 decades, we saw our service members willingly lay down their lives. We will never forget 19 years ago. Our nation's blessed to have had the opportunity to make the choice then between appeasement and righteous judgment, between tyranny and freedom, between international law and lawlessness, and between good and evil. 19 years ago today, our country made the appropriate decisions, and history marks them. In 52 more days, our great nation faces another choice. May God bless the United States of America, and may God guide that decision. So today, we're going to talk about the choice between the opposing policies. You'll need to advance. You'll need to talk about the choice between the opposing policies that we are facing in the national election. There are 2 very, very different policies being promulgated in this election. Probably the greatest differences that have existed in my lifetime. Tax implications are incredible here because on one side we have a current administration that has reduced taxes and onerous regulation to a much more reasonable level, certainly not a generous level. And on the other side, we're being told directly by that presidential candidate that our taxes are going to go up hugely. On one side, we're looking at restrained government and unreasonable regulation. On the other side, let me back up, restrained government and reasonable regulation. And on the other side, we're looking at expanding our government, adding more layers and layers of regulations to our businesses and our daily lives. We're looking at putting American jobs first with the continuation of our current administration, and jobs once again being exported overseas, as we saw in the previous administration. We're looking at national security interests being advanced by maintaining our current administration, and we're also looking at the other side with more appeasement of our enemies versus the assertiveness that's been shown by President Trump and his policies. We have a choice to make on whether we want to protect our borders. Border protection is critical. Not only does a lack of border protection significantly increase the cost to the average American because it raises our education expenses as we must educate the children of illegal immigrants. It significantly increases our health care costs because we're bearing those costs as these folks come into our country, take jobs that traditionally do not provide benefits, and seek government help for their health care costs. It also results in increased costs of incarceration. These costs are not small. A large proportion of our federal and state prison population is of those who have entered our country illegally and then gone on to commit felonies and crimes. And there's a cultural harm to it. If you've been to Europe in the last 10 years, you've seen the results there of illegal immigration, as Rome and Paris and London have dramatically changed, and where in those cities there exist areas where even their own police officers hesitate or do not go. They call that no-go zones. Protecting our borders protects American job opportunities. It prevents significant increases in our taxes. It protects American workers' incomes. Numerous studies and common sense dictate that if we allow folks to come in and take jobs that traditionally would go to the less educated in our society or those who were least advantaged, then not only are those jobs lost to those Americans, but other jobs that they may take result in diminuted pay. So American employers have chosen through the U.S. Chamber of Commerce to encourage illegal immigration, to allow labor to become cheapened and to increase pay to the top levels, and yes, to shareholders like us. That's not right. Protecting our borders gives Americans and those who have legally immigrated in our country a chance to earn a decent living, provide for their families, and the education of their children. These things are very, very critically important. So now it's a question of how does this affect our investments? Well, one thing I also would like to point out, I've mentioned this before, many studies have been done judging countries on our planet by their relative freedoms. And the freer a country is, the richer that country is, the higher its national income, the higher its workers' income. We need to look in this election at policies and not personalities or politics. Policies. The choice should be obvious if we make it versus the policies and not the politics. COVID-19 shutdown, let's do an update on that. This thing's progressing very much as we had spoken of in April and May and June and thereafter. So here we have two charts, and these are coming from Johns Hopkins that consolidate data nationally on new cases per day and also new deaths. You notice you've got two data points listed there in each graph. One's on March 1st, when we initially became aware that there was a problem, and the other is going through September 10th. So the mid-range there is going to be around the first part of June. And if you look, you'll see a steepening of the curve for new cases then. That's after we had done the bending the curve shutdown for 2 weeks, 4 weeks, depends on where you lived, and America started to slowly reopen. And you see the increase in new cases that occurred then. You also see a very slight increase beginning in June, mid-June, in deaths per day. On each of these, you see a pronounced decline at this time. In my opinion, that's happening because of the three modalities, the three therapies that have become available under emergency authorizations. Plasma therapies, where you take plasma out of those who have had COVID and recovered, and that plasma is injected into those who have contracted it or showing high symptomology problems, breathing primarily. That's one treatment. Hydroxychloroquine, which was widely criticized, has also been widely used and has been highly effective, as has plasma. I personally know of an individual for over 30 years who's a very well-known businesswoman in our town. And when she was admitted to UK with problems breathing, she was given both of these treatments. And her treatments rapidly improved her health, and she was discharged in short order. So what we're seeing here graphically is the fact that we have not only bent the curve, but the therapies have caught up to COVID-19. We're also seeing something we talked about in letters and communications with you going back into April, and that is as viruses replicate themselves, they become weaker in their next victim. Weather has also dramatically improved, we believe, the ability to transmit this disease. If we look at it on a closer basis for our clients who are in Kentucky where we're located, you'll see that pretty much the same curve. You'll see the cases are declining, and you'll also see that deaths have remained stable, been a little spurious, but they've been stable, and they have declined from the peak that was reached back around the first part of April. So nationally, deaths and cases are declining, and in our state, that's true as well. So out of 329 million Americans, America, as of yesterday, has experienced 191,000 deaths. So the chance of contracting the disease and dying of it is an extremely low 0.058%. Not 1%, not 0.1%, but about 0.058%. That's a very, very small number. You've got a higher risk of dying from many other diseases that the CDC follows. So I believe we're all but done with the COVID-19 shutdown. And let me tell you why. The various therapies that have been used, and there are primarily three, they've been highly effective in treating disease as long as they're administered before folks are really over the top and have to have a ventilator simply to breathe. But we've got a kill shot coming here, and that's a vaccine. There are dozens, literally, of vaccines in development around the world. There are three that we believe are leaders, according to CDC, National Institute of Health, and Johns Hopkins data. Pfizer is one, Moderna is the second, and AstraZeneca is producing the third. Pfizer's vaccine, the United States government has already funded and purchased 100 million doses of the vaccine and has a written agreement to purchase 500 million more. That's a lot of doses. Moderna, U.S. has also already purchased 100 million doses. And under Operation Warp Speed, which is our president's plan to get this vaccine as soon as it is ruled safe, effective by the Food and Drug Administration, that's the plan on how to get it produced and out. Under Operation Warp Speed, the military is going to be responsible for the distribution. So we're going to see a vaccine that was developed in less than a quarter of the time that we were initially told by CDC, the experts, that we would see a vaccine. It's going to be safe and effective because the FDA is not going to bend their rules. And that vaccine will be distributed very quickly. Slide, please. All right, let's talk a little bit about economic reawakening. Here's some recent economic data points, and I've just gone over this week. These are very representative of what I'm seeing day in and day out. And folks, the numbers don't lie. Numbers don't have a political bias. The numbers are real. So on the September 8th, on Monday, we had a release of our what is that exactly? I'm sorry. The NFIB, Federation of Independent Businesses, Small Business Optimism Index. I'm sorry, that's not clear on the slide. That index in July was at 98.8, and in August it had risen to 100.2. The estimate by economists was that it should have fallen to 98.4. Now, what does this tell us? It tells us that the nation's largest group of independent small businesses is seeing increased optimism by those who are the true drivers of our economy. We also had another data point that came out that day, released by the federal government. Consumer debt in July went up $12.3 billion from June. This is a increase that is very positive, because what it shows is consumers are opening up their wallets. They're gaining confidence over the month of July. On the next day, September 9th, job openings available to Americans were announced, and they were at 6.6 million. That's an increase of 600,000 from the 6 million that were open in June. That means more businesses are hiring. That's again an expression of optimism and hope. Then on September 10th, we found that jobless claims of Americans, first-time jobless claims, were 884,000. That was unchanged from the previous week. So that day also, the Producer Price Index for the previous month was released, and it was up 3% in August and was expected by economists to only go up 2%. That means that producer prices are going up because more people are buying. That's a sign of businesses investing in capital and equipment. Then on September 11th, today, the Consumer Price Index in August was released, and it was up 4% versus a 3% expectation. Now, that's in conjunction with the Federal Reserve's policy announced about a week and a half ago to begin to work on raising inflation. That's a really good thing. It hurts bonds, which we aren't invested in, and it helps stocks, because an increased inflation rate will increase our underlying earnings, and that will push stock prices. The Federal Reserve has realized that our inflation rate has been too low for too long. That's not a good thing. It's a bad thing. It could have led to stagflation, which we experienced for a large part of the 70s and for part of the first part of the early 2000s. Business Optimism Index, I'm showing a graph here. I've already gone over that. So I'll go to the next slide. U.S. jobless claims. So you can kind of see the trends here going back a few months. You know, we peaked out in the early April time period. So it's very, very clear that the economy is in high recovery mode. On April 2nd, we sent you a communication, did social media posts, letters, and we said that we believed March 23rd was the market low. Well, we were right. Since that time, through yesterday's close, our accounts have appreciated over 46%. Now you can add about 3% to that today. As I walk in the room here, as of our last look, market's down a little bit. We're up about another, what will be on this measurement, 3%. So we're right around that 50% level. That sounds really large, but we believe there is much more to come between now and the end of the year, and I'll get into that in just a second. Last month in August, our average client account net of cost went up 8.97%. So $100,000 would have gone up $8,970 net of cost. That compares to the S&P 500 index movement of 6.99%. So we outperformed the index by over 30%. Most importantly, and this is critical, I want you to know where this is coming from. When we were at the bottom of the market at the end of March, beginning of April, we were clear in that we said we believed we'd see a 70% move by the end of the year. We didn't sell assets in the decline because we were confident that this would be a very short-term problem. We're more confident now. So we are forecasting our portfolios, which are significantly undervalued versus the overall indices and equity markets. We're confident when we say there's a 20 to 30% upside move between now and the end of the year. And folks, when I say that, I want you to know I'm being conservative. It's likely to go higher, but it shouldn't be any lower. Next thing is questions. We had some questions that have come in via email yesterday and today. And for those who are watching, and welcome folks, I see you online. I won't say your names, but I do see you. Please feel free online to query us with questions you'd like to see answered. But I want to talk about some of the questions we're getting from clients lately, because I've always figured that if one person asks, there's probably 10 people that are wondering. So let's go through that real quick. First one is potential civil unrest. And you know, I'm fortunate. I get to work predominantly with a lot of people who have lived for a while. And we remember well the 70s and the civil disorder and the riots and the burning and the looting and the Syrian Liberation Army and the Black Panthers. A lot of stuff that we see today, if you think about it, the SLA, Syrian Liberation Army, was very much like Antifa. They just haven't robbed any banks yet. If we let them go, they will. Black Panthers are very much like the BLM movement, an organization founded by 3 self-avowed communist Marxists whose stated objective is the destruction of the American nuclear family and what they call paternalism. Remarkably similar times too. I remember it well. I remember riding at University of Kentucky, burning the flag. A lot of things that I found in my adult life and felt as a child were pretty despicable. So, you know, that ended. A lot of people then in the 70s thought it would never end, but it did end. Rioters get tired. Mr. Soros runs out of money to pay the leaders of those movements, or whoever is paying them, because somebody sure is. Otherwise, I don't think they'd be up every night in Portland for the last 100 days. Most of the people rioting are children, very, very young, white children who don't understand the civil rights struggle the way those of us who lived through it, of all races, do, and who stood with their leaders for decades, not just recently. These things burn out. So I do not see long legs on what we see in Portland, Seattle, Chicago, what we've seen in LA, what we've seen in Detroit. I don't see that spreading. I see it in municipalities that are controlled by people who frankly don't have a lot of common sense. The people in municipalities, both Democrat and Republican, where common sense is exercised and where our superb police are allowed to do their jobs to preserve order, we're not going to see any problems, folks. And if we do, I assure you that our leaders, Republican and Democrat, will put it down very, very quickly, as I believe they've done in Louisville. So I don't see civil unrest spreading. I see it isolated to these heavily, decades-long, liberal-controlled towns and states where corruption has always been a problem, where getting your next vote is always the objective, not protecting, not helping people grow, not creating more opportunities, but giving taxpayer cash out for votes. That's where these things are going to hurt folks a lot. And then as a person who believes in the free markets, I also believe the market will correct that fairly quickly. You know how it does that? People move. Good people. People of faith. People who do know the difference between right and wrong. People who are not confused about what our nation stands for. They won't stay there. And when they move, they take their tax dollars with them. That's why Florida real estate is exploding in value. Exploding. That's why New York City real estate is plummeting in value. And as their real estate values plummet, and those are hard numbers, you can look it up. As their real estate values plummet, that's a coincident indicator of their tax base going away. And as their tax base goes away, their politicians will be replaced. They will be run out on a rail. I promise you. And what arises from that? Well, the same thing that arose in New York City in the 1990s. A Rudy Giuliani. That's what's going to arise. A conservative, fiscally minded, safety minded, righteous minded individual will rise. New city council members will come on to replace the weak, ineffective charlatans that are governing those cities. So I reject the idea that unrest will spread. It hasn't spread. It's stayed in the same municipalities. And it'll end there when either our president invokes the Insurrection Act, which he doesn't want to do. He wants to be invited in, like Baltimore invited him in. We got that solved in about 10 minutes. He'll either invoke it because he has to, or it'll burn itself out because they'll get really tired. They'll go home to their mom's basements or wherever the heck they live, or their funding will dry up and they're not going to be paid to hurt people, assault, stab, shoot, loot their businesses, burn their businesses to the ground. Those things always burn out, folks. Please remember the 70s. Remember the SLA. Remember the Black Panther Party. Got a good model for how this thing's going to end for BLM, Antifa, and their associated thugs. There's a lot of naivete in our streets today. And there's probably some good people out there that think they're supporting a good cause. The cause is good. Those in charge are using you and will hurt you ultimately. Next question that's come up quite frequently is, Kelly, what's the plan if Trump is not reelected? Now, you guys know that in September 2016, we were a complete outlier and very confident in our assessment of the Electoral College vote. We did that analysis again in July, and I do it every week leading into the election. And it is very clear to me that President Trump is extremely likely to get a second term, like 99% plus. It's very hard to manipulate the Electoral College, and it's going to be almost impossible to eliminate the average voter who is going to vote correctly, either on a mail-in basis or at the polls. So I'm not concerned about this. I'm certain about the path on that. But I could be wrong. I've been wrong before. So what do we do then? This question came up in 2016, and my answer is the same. You know, in 2016, we were looking at a Clinton candidacy. Both Bill and Hillary Clinton had a huge proportion of their political contributions throughout both political careers that came from the financial services and predominantly the hedge fund industry. They kind of support everybody, Republican and Democrat. And they usually guess wrong. But if you look at where funding is coming now for Joe Biden and Kamala Harris, it's coming from the same sources. And those sources sometimes hedge their bets, and many times they're wrong. Those sources are the same folks that supported Mitt Romney in 2016 primary. Why? Well, hedge fund managers do not, at any cost, want to lose their 15% ridiculous low tax rate. And until we change the law, they're going to have that. So they're going to support whoever supports them financially. I think a lot of people do their political donations out of an abundance of caution for their own situation and not out of an abundance of caution for their friends, for their coworkers, for non-family. So my contingency plan is based on the fact that I doubt it's going to happen, but if it does, I think you get the same outcome. I think you get an economy that does continue to grow, policies in place that are very difficult to erase, a Senate that is definitely still Republican and does not comply with the edicts of a House that could still be in liberal hands. So the president can't put bills through on his own. And he's going to have a hard time changing policies in midstream or even in his first term. So I think you get a muted recovery, and my contingency plan is we will let the market tell us what to do, because that's what I always do. Some of you may have noticed recently we sold an excellent covered call on Target in your account, received a very high premium for doing that, and within a day or so of the time we sold that call, Target did settle slightly as I had thought they would. You know, I kind of just let the market tell me to do that after Target went up 15%, almost 15% in a day. So we'll listen to the market, but I don't think there's going to be any radical, dramatic changes. I think all of a sudden, if Joe Biden was elected, he would renege on his word. He would twist what he said, very much like most politicians have done throughout my lifetime following elections, and he will veer back to the center. If I'm wrong, then we will be getting out of everything we have that is sensitive to the government's edicts, sensitive to overregulation, sensitive to high taxation. But I'll let the market tell me first, and I'll see how they do. And then we'll move quickly. We won't be delaying it. And, you know, our methodology is we will sell when we perceive there is a true recession. And if it's anything other than a true recession, we may hedge, we may use some covered calls, but there won't be any mass movements to cash like you all saw in 2008 once we believed there was a recession afoot. That saved us quite a bit of money on the downside and allowed us to position appropriately in 2009 when we called the market bottom. But I don't think that's going to happen. Next one that's come up a lot, I'm getting questions on Core Civic. You know, Core Civic has been an extremely poor performer this year and stopped paying its dividend about a month ago. And so the question becomes, why are you holding it? Well, I'm holding it because Core Civic made a decision to change their business format and has already announced it. When they said they were looking at business format, we did a social media comment for you, and this is going back a couple of months. And we said that we believed Core Civic would go from being a real estate investment trust corporation to a plain C corporation. And that's exactly what they announced they were going to do after consultation with many attorneys and stock brokerage firms. So that business change will occur on January 1st. This will free up a ton of cash that previously, under federal laws that affects real estate investment trusts, they were required to distribute. That's why towards the tail end we have 15-16% dividend distribution. They don't want to distribute that much cash, and the reason is this is a growing company and they're not going to stop growing. They've been beat down by fears of a Biden presidency and the elimination of private prison companies. We again believe that is highly, highly unlikely, but that has caused a discount to develop in Core Civic. And now, with the new business format and with the fear of a Biden presidency, even in the last 2 or 3 weeks, starting to fade, we think that the stock will more than double over the next 6 months. That's post-election. We believe it is a well-managed company. We believe they have a strong capital position because I've looked at their balance sheet, their cash flow statement, their income statement. I don't see problems in the business. I see a market drive down in price from criticism from folks who aren't going to be in power, but those who feared they could be in power have eaten the company alive. When we get into next year, I believe you'll see the wisdom of holding that position. Had another question that just came in today, and I want to address this. You know, Boeing's been through some real wars in the last year or so. The 737 has been the major issue, and now the 787, which is kind of their flagship aircraft right now on the commercial aviation side, has developed some known issues with shims. And shims are kind of like spacers that go between control surfaces. Now, Boeing's looked at the issue, and what they've said publicly is that they are currently in discussions with the FAA, excuse me, and that they do not believe they need to do anything more than an inspection and an adjustment during normal course of maintenance, like an annual inspection. The FAA is going to look at that, and as always, they will be the decision maker. That decision has not been made. I expect it to be made shortly, and we'll reassess at that time. My opinion is it will not be a major problem. It's not going to result in a long-term grounding of the 787. The FAA has also stated publicly they don't even know if they're going to do what's called an airworthiness directive, an AD on it. It could be a more minor kind of administrative write-up, again, that requires the aircraft to be inspected during a normal maintenance inspection. So we're not talking about a grounding of any kind, much less long-term. Folks, Boeing is likely to double in value over the next year. During this time that the part of their business that's commercial has been suffering in the last year, on the military side of their business, where approximately 40% of the revenues come, they've been rocking and rolling. They've had a great year. When the commercial side kicks back in, it kicks back in still with an approximate 7-year backlog of orders, and a company that's retooled and reminded that they better do things right, because the FAA is going to be looking over their shoulder to keep American travelers safe. Now, with that being said, I was a Boeing B-52 pilot. I trust Boeing products. I think they're going to do just fine. I think when these airplanes are approved on the 737 to come off the line and be flown again, that they will by far be the safest aircraft ever built. I think if I was an airline CEO, I would definitely want to buy Boeing products, because I know the FAA, led by Steve Dixon, is living in their offices and making sure they do everything right. I trust them a lot more than I trust an Airbus. So I don't expect problems with Boeing. Boeing's going to do great. I do, and I'm telling you, I do expect in the next year we'll see them double in price. That's why we've maintained our positioning and will maintain it long term. With that, do we have any other questions, Brittany, that I need to address? Trying to see. I don't think there's any. If you guys do have any questions, please feel free to either call the office now at 859-223-6333 or email me directly at kbuckley, KBUCKLEY, at spectrumalliance.com, and we'll get back to you today. It is an honor to work for you. It's an honor to be able to help you grow your financial safety, security, and assets. And we thank you for that. And please say a prayer for all our 9/11 victims and their families who still live with that every day. God bless you, and God bless the United States of America.